What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro level analysis and we will look at the indices, the VIX, and Bitcoin. First up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up we will take a look at the SPX, and this is a weekly chart, so every candlestick does represent one entire week's worth of price action. Now we can see we're well on our way in this stock market correction, and we did get rejected at that price target at 45.34, and we're currently sitting right on top of the 20 simple moving average on this weekly chart. So this is definitely going to be a very strong support level, but not only is it a strong support level, it's a very critical support level. If we start to see the week closing below the 20 simple moving average as soon as next week, we could see this bull market roll over and we could start to see a much more deeper correction. Right now, coming off the highs to the low, we are currently down about 5.4% with the price action, but from closing price to closing price, we're only down about 4%. So this is still in the realm of just a stock market pullback and not a full-blown stock market correction, which could easily go as deep as 10 to 15%. Now, right now, this is a very strong support level that the bull market could bounce off of. And as you can tell on the weekly chart, we are still in a bull market. All of the moving averages are still stacked to the bull side, and the price action is still relatively close to that 20 simple moving average. It's not until we get a weekly close below our 20 simple moving average that we could come much lower, all the way potentially down back to the 4,000s on SPX, or possibly even down to 3,800 or 3,650 on the SPX. So right now, this is still just a pullback. Even though it does appear that we are in a stock market correction, we are still in the realm of just a pullback at this time. So from closing price to closing price, we're still in that 4% pullback, even though it has been a very painful 4 weeks. Now, this is going to be a very critical test for the SPX because as you can see, we have tested that 20 simple moving average going back in September of 2020, October of 2020, and then we did get very close again in March of 2020. So this has been the first test of our 20 simple moving average since this week and last week, which was obviously in the month of September. So it did appear that we're seeing bulls buying the dip. As you can tell, there's a nice wick below this candlestick. So buyers of the dip did step in on Friday, and that could mean that we did see the bottom and this pullback is over, and we're going to get back on the bull and start running back up to some of these other price targets. So if that was the bottom right around SPX of 42.90 and we're about to get back on the bull, this will be the critical support level that we need to pay attention to right around 43.50. Above 43.50, we're bullish on SPX, and below 43.50, it's looking like the SPX is rolling over and we're getting ready for that deeper stock market correction. If we bounce from here, we're still going to have resistance at the previous all-time high at 45.34, and we still do have price targets at 46.05 and 46.76. Remember, if I switch this over to a log chart, we had that very critical resistance trend line that basically called the top before we had this pullback. We had a sharp pullback once we hit that resistance trend line, and the next time we hit that trend line would be right around SPX levels of 4,600, and on a time frame that could happen as soon as 2 weeks from now. So it is possible, based on the price action, if we bounce off this support, that we do have a very bullish 2 weeks ahead of us, and we could get all the way up into the SPX levels of 4,600 and possibly beyond. Remember, this is a resistance trend line, which means if we break above it, it will become a support trend line. So if we see the SPX breaking above 4,600 in the next couple of weeks, that will be a very bullish indication that the stock market is still going much higher. Remember, I believe that we are in a secular bull market, so I'm not trying to call a top, and I'm not trying to say the stock market can't go to new all-time highs. As long as we have this bull trend and we're staying above a positive sloping 20 simple moving average, I am still bullish and I still do believe in the secular bull trend. That doesn't mean we can't go through a full-blown correction. So if we do start closing below this 20 simple moving average, the next critical support level on a macro level scale, I believe, is going to be down here right around 41.55. Below 41.55, it will be looking a lot more bearish, and we're very likely coming back down to our 50 EMA on the weekly chart, which will be in the low 4,000s. So below 41.55, look for a potential of SPX to come all the way back down to about 40.60. This is still a bull market, and we're not going to hit those levels unless we see a decisive break below 43.50. So for the time being, on a macro level view, I'm still bullish because the price action and the trend are still bullish on the weekly chart. If I switch this over to a monthly chart, you can see that we're closing just above the 5 EMA, and we still do have the bull trend on the monthly chart as well. We have no resistance from the Bollinger Bands, and our price targets are well within the upper Bollinger Band, and we're sitting on top of support. So sitting on top of support with a bull trend does favor the bulls to break out in the month of October. Otherwise, we'll very likely see that deeper correction. Now, real quick, I do want to switch this over to a daily chart and look at the SPX as well, because from the daily chart, you can see a lot more downtrending. We lost the bull trend on the daily chart, and the price action is currently sitting below all the moving averages. So you still need to be cautious in the short term, but as I just showed you on the weekly chart, we're at a very critical support level on the weekly chart as well. So if you start to see SPX breaking below 43.50 or 43.06, you can expect to see the SPX coming down to 41.55. It's really that simple, because if that support level does break down, we're very likely going to make another leg lower, and that will be right around 41.55. So that level is critical on the daily and weekly chart, and on the monthly chart, that is the 5 EMA. As you can tell on the monthly chart, that 4,300 level is basically another critical support, so you do have confluence there with the daily, weekly, and monthly charts. Jumping over to our bear bull survey, we can see that we have way too many people that are becoming bearish. We started out at 39%, and now we're just over 40%, and we still do have over 31% people that are neutral. So with only 28% of the people bullish and sitting right on top of critical support in a macro level bull market and still having the bull trend, I have to give benefit of the doubt to the contrarian here, and I do believe there's way too many people that are bearish or neutral. That means there's a lot of people either trying to short this market or in cash on the sidelines just waiting to jump in, and those people will start to FOMO back into this market or get short squeezed if we do start to bounce off this critical support. So looking at our bear bull survey and looking at the price action in the trend, I am beginning to get a lot more bullish, and I am believing this is possibly just a stock market pullback and we're about to go much higher. That's just my opinion based on the analysis and the sentiment in the market, because if you get way too many people that are bearish, it's going to be very difficult for the market to continue to sell off. Remember, if too many people are selling, there's almost nobody left to sell, and eventually buyers will take back over, and the people that are out of the market, they will get FOMO and they will jump back in, driving the market even higher. So jumping over to the NDX, which is our NASDAQ 100 index, we can also see we did have a very bearish week, but again, we saw buyers of the dip, and we did see the weekly price action closing above our positive sloping 20 simple moving average. So on the NDX weekly chart, we still do have the bull trend, and we still do have bullish price action. So from the closing high on the weekly chart to the weekly close that we just had is about a 5.5% pullback. So again, the NDX is in that sweet spot for a pullback, and anything deeper than this will turn into a correction, and we could see the NDX coming all the way back to 14,050. Now, right now, the critical line in the sand for the NDX is going to be right around 14,740. As long as we're above that, I'm bullish, because the price action and the trend are still bullish, and we are still sitting above critical support. So this is a very nice 4-week pullback, and we could be ready to go back to a brand new all-time high. And the next price target to watch on the NDX is up there at 15,985, and we might as well just round that up to a nice even number of 16,000. So we still have the bull trend, and we still have price action sitting over critical support. So this could be possible that the stock market pullback is ending, and we did see buyers starting to step in on Friday. On a daily chart, you can see that we had huge buying on Friday, but even on the daily chart, we are still developing some bearish trending, and the price action still below all the moving averages. So still be cautious, but there was definitely a lot of buyers of the dip, as you can tell on Friday by this huge wick below the candle. So on this weekly chart, that buying did just enough to make this chart maintain a bullish outlook. Even though that could be a bull trap, it does look like it could be the real deal with the price action sitting above critical support. So zooming out here, you can see this is a very sustainable long-term bull market, which does mean we could still be going to new all-time highs. So never try to call a top as long as we're in a macro level bull trend. We're sitting above support, we still have the bull trend, and there's no reason to believe that the stock market is rolling over and dying until we see a price action close below this critical support. It could be coming soon, or we could be bouncing from here and getting back on the bull. Have an open mind and just continue to watch that critical support, and if you follow the price action, you will be on the right side of this trade, because we're very close to knowing if the market's going to roll over and come back down to 14,000, or are we going to bounce and start heading back up to 16,000. We're very close to knowing, and if you stay objective, you will be on the right side of this market. On the Dow Jones weekly chart, we can see that we did test that critical support trend line, which is just below 34,000, and we did see a lot of buyers at that level. We did close below our 20 simple moving average, and we did lose the bull trend. So the Dow Jones could be leading the way and already starting a stock market correction. So the critical level on the Dow Jones is going to be right around 33,800. And if we lose that level, we're very likely coming all the way back down to about 32,800. So watch that critical support, because the Dow Jones did lose the bull trend, and we could lose that critical support and even see the Dow Jones going into a bear market. So watch the Dow Jones, because it by far looks the weakest, already losing the bull trend and the price action below all the moving averages that are very critical support. So the next critical support level below the support trend line will be this 50 EMA level at 32,800. So watch that level closely if we close below 33,800. On the Russell 2000, we were pretty much flat on the weekly chart, and we didn't see the price action going much of anywhere, even though it did close just below that 20 simple moving average. Now the Russell 2000 has been chopping around and going absolutely nowhere, going all the way back to February of 2021. As you can tell from this chart, it's very consolidated, and we're seeing a lot of compression in the Bollinger Bands, which does mean that we're squeezing and we could see a huge move in the Russell 2000. Now, normally when you get a Bollinger Band squeeze, it tells you there's a big move coming, but you don't know which direction that squeeze is going to fire. So right now, you could see the Russell 2000 breaking out above 2340, and that would be a bullish breakout, or breaking down below 2170, and that would be a bearish breakdown. So below about 2170 to 2160, you're looking for the Russell 2000 to retest 2100, and below that we could go much lower, possibly all the way back down to 1970. If you see the Russell 2000 breaking out above 2340, we could blast off to brand new all-time highs, and the Russell 2000 could go for that next leg higher. So there's really no trending in the Russell. As you can tell, it's just bouncing around between support and resistance, and there's no macro level bullish or bearish trend because it's just going sideways. On the monthly chart of the Russell, you can see this a lot better, and you can see we're hanging around that 5 EMA. Even though we still do have the bull trend, we don't see the price action going much of anywhere. This is because the Russell 2000 went way too far, way too fast, and now it's correcting through time. Correcting through time is a very bullish correction, because when you don't correct through price, you really wear out the bears and they can't get a break to the downside. So eventually they give up, and you could see the bulls taking back over. So if the Russell 2000 starts leading the way higher, you will see a break back above 2300, and then you will get ready for that next leg higher. For the time being, you need to stay neutral until you see that bullish breakout or the bearish breakdown below support. On the VIX weekly chart, we can see a lot more concern that could tell us a stock market correction is not yet over. We can see the VIX did have a very bullish week, even though we did see the VIX starting to get crushed late last week, but we still do see the VIX breaking out and closing above 20. Remember, we got the confirmation of the VIX closing above 23 on the daily time frame, so this could be the beginning of a very volatile period in the stock market, with the VIX showing the weekly breakout. You can see on the VIX we haven't had a weekly breakout in quite some time, and it's very clear from this week's candlestick that we did close out above that resistance trend line. We tried last week, but the VIX got crushed back down below, and this week we did break out yet again. So if this breakout holds and we see another week of the VIX closing above this level, that would validate that we're more than likely going to see that deeper stock market correction, and we will lose the critical support levels and the price action on the indices. So watch the VIX right now, because it is helping tell you the full story. And if you see the VIX staying above 20 going into next week, I would expect to see a much deeper stock market correction. Now on the bullish side, if we see the VIX getting crushed back down below 18.2, that would be very bullish, and I would expect to see brand new all-time highs in the market. So either way, the VIX above 20, you're expecting a deeper stock market correction, or the VIX back below 18.2, and we're back on the bull expecting to see new all-time highs. So draw your lines at above 20, we're going into a deeper correction, or below 18.2, we're going back on the bull market. Anywhere in between is just a chop zone, and we don't know exactly which way the market wants to go. On the Bitcoin weekly chart, we're currently sitting right around 49,000, and we do see the price action above all the moving averages, and we still do have a bull trend on the weekly chart. Now, Bitcoin is a great measurement of risk on, and we're definitely seeing a lot of risk on with this week's candle. We came all the way down to our critical support at the 20 simple moving average, and we saw buyers stepping in, and now we're currently sitting at the high of the week on the candlestick, which is a very bullish looking candle. We took out last week's high, and we see the price action sitting at the high of the week, which does tell us this is a bullish development. Now, if we see Bitcoin breaking back above 52,000, we could see Bitcoin reattempting to break out to new all-time highs this year. So right now, Bitcoin is in a bull market on a macro level view, and the price action is above all the moving averages. So we do have bullish price action and bullish trending in Bitcoin. This could mean the stock market is going to follow suit, and it could mean if Bitcoin is going back on the bull, we're also going to see the stock market getting back on the bull as well. So follow Bitcoin closely, and as long as it's above 41,000 support, you can stay bullish on Bitcoin. If we lose the 40,000 support, we could be coming back to 30,000, so watch that support level very closely. To the upside, we need to break out above 52,000, and then we could start heading up to the next resistance levels, basically at 59,000, and above that, we're at new all-time highs at 67,000. On the monthly chart, you can see the price action is above the 5 EMA, and we still do have positively sloping EMAs, and we still do have all the moving averages stacked to the bull side. So Bitcoin looks bullish on weekly and monthly charts, and it does look like Bitcoin is back on the bull and getting ready to run yet again. Look for this next leg higher to take us to new all-time highs, and that could happen as soon as this year. So jumping back over to the S&P 500, this is without a doubt a very critical crossroads in the stock market, sitting right on top of critical support and still in a macro level bull market. When you're in a macro level bull market, you have to understand that the bull market will not die easily. So even if we get a bounce from here, if it's a lower high, you could assume that the market is still trying to roll over. But if we break out to a new all-time high, this market still has plenty of juice to continue running. Remember, we're doing technical analysis and we don't care about any fundamental reasons or valuations. We're simply following the price action in the trend, and both are still bullish at this current time. The only indice that doesn't look bullish is the Dow Jones. So whether or not that's leading the way lower is to be determined. But if it is leading the way lower and we're about to see the S&P 500 and the Nasdaq 100 roll over, we should know very soon. I'm not going to make any guesses or any assumptions. Right now, it looks like we're either about to break down and go through a full-blown correction, or we're about to bounce very impulsively and make an attempt to go back up to brand new all-time highs. Let the price action do all the talking, and everything else is just noise. Don't forget, I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and with the current market conditions, now is an absolute great time to try out BANC Trade Alerts. I'm running a 50% off promotion code for your first month, so if you're interested in joining or finding out more details, you can click on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.